What's up, guys? Russell again. If you're new to the channel, make sure you hit subscribe because you'll get all the most awesome content out there on stock alert services, options alert services, and just general tips and tricks on stock trading as well. So, today I want to talk to you a little bit about bag holding. So, it's one of the biggest mistakes that I've made when trading, and I know it's certainly for most people, it's one of the early mistakes that they make. So, it's such an important concept, we've included it into Jesse and I's new course called How to Not Blow Up Your Trading Account. It's the accumulation of 10 years of all the tips and tricks that we've learned so that you don't become one of the 90% of traders that fail. And there's a whole section on trading psychology, looking down at the curriculum down here, all about bag holding. So in this module here, we talk about bag holding in depth, why people tend to do it, and how to avoid it. So if you've got a chance, go and check out this course. I'll put a link in the description below. But let's get started on the bag holding stuff of the day. So let's go up to the top here. So my biggest trade mistake was by far bag holding. So bag holding is where you take a stock and you buy it and it doesn't work out the way you think it will. Maybe it's a day trade and then you just don't sell. And you tell yourself all kinds of lies like, oh, it's going to go back up, oh, it's cheap down here, these kind of things. So it's such a common mistake, and I've seen so many people over the last year blow up their accounts by bag holding for months and months and then eventually selling for a huge loss. So I wanted to talk about it a little bit. Here are some of the things that you are guilty of if you're a baggie or a bag holder. One thing is that you'll always find yourself telling yourself it's not a loss until you sell. Well, that's technically true, right? It's not a loss until you actually sell for a loss, except you're forgetting opportunity costs. So the fact that you have half your capital or even, any amount of capital tied up in a losing position, which you've no idea how long it will take to go back up, right? You could be having that money locked up for a year or 2 years. It's unlikely though, because at some point you're going to freak out and sell for a loss and then unlock that capital. But saying it's not a loss until you sell, he's just fooling yourself. It is a loss. If you're holding anything that's 20% or less, 20% down or more, and your stop loss was 10%, and it just keeps going down, then it's a loss and you should sell. That's what I've always found. If not, you're just going to lock up that capital, you're going to miss out on profitable trades because you're not going to have the money to use, and you're going to eventually end up selling for a loss anyway. So telling yourself it's not a loss until you sell might occasionally work out, but it's one of the top reasons that I blew up my first trading account. So let me just show you what happened with that. So I told myself that it wasn't a loss until I sold. This is my wife Malia's trading account, Profitly account from back in January 13 when we first started trading. And we joined Super Trades. So I don't know if you guys know what Super Trades is. It's this guy, Superman in the stock market. Superb trader, but we were complete novices. So we did what a lot of novices do, which is massively grow their account very quickly. So we had about 20, 25K. We started in January, and within a year, we'd made, $20,000 from that, trading part time. So it was awesome. But what this doesn't show is this idea that when we stopped recording here is when we actually took a hiatus from trading. And the reason we took that hiatus is because we actually gave pretty much all of these gains back by bag holding. So what we didn't realize at the time is this massive growth was aggressive trading. It was basically swinging for the fences and getting lucky. We hadn't developed the discipline that was needed to cut those bags off as soon as they started to get heavy. So it only took 2 trades, I think maybe 2 or 3, that we held for too long that brought us right back down here. And that was just bag holding. That was saying, oh, it'll go back up. It has for the last year. We've taken very few losses this last year. It'll go back up. But like they say, stocks go up the elevator, well, up the stairs, and then they come down the lift or the elevator really quickly. And that's what happened to our first trading account. We've subsequently obviously made all that back up. It took a while, but we got back up and continued to grow. But nevertheless, bag holding is what killed our first account. And I bet that's what happens to the vast majority of traders out there, especially if they start in a really strong market and every stock they buy dips maybe a little bit and then goes back up, and they just learn that if you hold it long enough, it'll go back up, and that's just not true. So that's often why people will destroy their accounts by holding. It's definitely my biggest mistake trading. Then the other thing is that you tell yourself once it's down is, oh, I'll just sell when it starts going back up. Well, that's kind of vague, right? I mean, do you sell when it goes up 1%, 5%? I mean, what is that? I'll sell when it starts going back up. What if it doesn't go back up? For example, on this chart, XSPA, we were playing this last year, my community, and we ended up bag holding from this region all the way down. So the big question is, when do you decide to sell on the way back up? Do you sell on this bounce? Or do you think you're going to sell on this bounce, and then once it starts to recover, maybe it recovers this moving average, you start to tell yourself it's bullish again, so you just keep holding, and then suddenly you're down even more. Then you maybe do it again, and then again here, and before you know it, you've gone from $5 or $6 down to $1. Mainly because it's not as easy as it sounds, right, to say that you'll sell when it goes back up. The only exception to this is Marion in our Discord. She is phenomenal at digging herself out of these holes. So if this was Marion, I think what she would have done is she would have bought a bunch down here and sold some of it going back up here, sort of digging her out of the hole. Well, that's very difficult and it can be really dangerous to do. Marion's an exception, not the rule. So I think that covers that point. So selling when it starts to go back up is too general. It's not a rule. It's just a vague idea. So with trading, I think you have to have your fixed rules and you have to stick with them no matter what. The other one that everybody always tells themselves, and I did this too, is, oh, it's a great company. I'm going to do some Google searches. I'm going to look and find out what the management team's like, what their financials are like. Is there any rumors? Maybe, oh, okay, I'm going to hold this because I think, some guy on StockTwit said this should be a 10x company. I think I'm going to hold it for the long haul. So like on this meme on the right, it's why didn't you stop out? Oh, they have a solid management team, but it's crashing. Oh, I'm now a long-term investor. No, you're a bag holder. That's what you are. And you see this on StockTwits all the time. Let me show you the StockTwits page that I pulled up earlier. So this one, you'll see it all the time. There'll be these vague, like, oh, who sells on drop days? It bewilders me. Well, if every day is a drop day, you're going to be pretty broke pretty soon. So they will say things like, oh, this will bounce in a week or two. Or, see, we get the management seemingly overconfident. It's just like all these excuses. StockTwits is one of the worst places to find information on stocks because everybody says things like $30 in a day, so manipulates. I think he meant manipulated. But there's always this idea that the man is behind you and they, whoever they are, I guess they're meaning market makers, are trying to get you in some way and really it's a trick, And in reality, it's probably just selling off because of bad news. But people will justify their positions just basically to keep themselves going, if nothing else. Just a flesh wound. It's like, yes. Um, so, yeah, so you have to be really careful with that, thinking that, it's a great company. It's very easy for your brain to justify losses like that and say, I'm just going to hold them. And sometimes you'll get lucky. Sometimes they will come back up. Maybe you're right. Maybe it is a solid management team. But you got to really check and make sure you're not just trying to placate yourself and that you're not just trying to be right when really you're actually wrong and it's time just to move on. This is a hilarious one, and we've all done this. I've done it. It was one of my worst trading mistakes. It's to say, oh, it's cheap at these prices. I'll just buy down here a little more, a little more. And as you can see on the right here, this is what usually happens, right? Buy the dip, they said. I bought the dip. Boom. I bought the dip. I also bought the dip. And I bought the dip again. And suddenly your whole account is in this stupid stock that just keeps going down and down and down. And at some point you end up panic selling it or just sitting there for a year doing zero trading because you bought the dip all the way down. So that is definitely a mistake that a lot of people make, averaging down, buying the dip. Now, there is a place for averaging down, right? But you have to wait until things like the technicals all align and that you've got a confirmation of a reversal, not just buying a dip because it's cheap. Like trying to do bargain hunting doesn't really work with short-term trading like this. Sure, if you're a long-term investor, it works great. Or if you're investing for dividends, for example, just keep averaging down. But as a active trader, basically buying the dip and just buying stuff because it's cheap is just really a way to placate yourself and keep hoping that the stock is gonna recover. So the other thing is like everybody always tells themselves I'm gonna be so rich when this goes back up. That goes in line with like this other one where you basically keep adding and adding and adding. And again, it's really a false narrative that goes on in your head. Trying to just keep adding to a losing position is just never going to work. So I think the basically the end message here is don't become a baggie or a bag holder. The For sure it was my worst trading mistake, and honestly I've learned a lot from it, and I rarely bag hold anymore. I don't actually remember the last time that I bag held. I think it's something that I managed to get hammered out of my trading a few years ago. Man, that looks like a big bag though. I wonder what he's got in there. Um, so bag holding stocks, it's a huge mistake to make. If you want to succeed in trading, do not bag hold stocks. It is definitely, definitely, definitely at the top of the list for reasons about why people lose all their money trading stocks. So I really encourage you to do some research into bag holding and to go through some of these points and make sure that you're not doing these if you're a new trader, because it may work the first time, it may work 10 times, but when it stops working, you'll lose a lot of money and you'll probably quit trading like 90% of the traders do. So I hope that helps. I think it's something that's so important, and I really want you guys to think about bag holding. Don't become bag holders, and I look forward to talking to you again in another video. All right, thanks for listening. Catch you later.